have this returning guest. Lobo Tigre is a author and a field reporter and explorer on many fronts, talking about minerals and where they are to be found and the companies that are exploring them and developing them and that sort of thing. He's here. He's on the is it the Independent Speculator? Am I correct? That's right, independentspeculator.com. Very observant of me to read the words that are prominently displayed above your head. And so, for those of you who are in the live chat with us, this is really live, and you can really ask questions of Lobo Tigre and of myself, Donegan Kaiser, the founder of Liberty and Finance. We're here live with you. If you're on YouTube and you're not no, you don't know how to participate in the live chat. It's easy. Just make sure you click the subscribe button because subscribers can get into the live chat underneath the video on YouTube. And you can, in the text stream, feel free to go ahead and text your questions. I'll try to get those in front of Lobo while we're talking about several topics of interest to you. And we'll see where that leads us. I primed the pump here with a starter topic, which is oh, by the way, Lobo, thank you for joining us here on Liberty and Finance.
Always happy. I love liberty and finance.
Yeah, you do. You're a lover of freedom, and we've talked about that with you a few times about why you chose to vote with your feet and relocate where you did, and that sort of thing. Um, we would love to get into that if people want to. That's perfectly fine. I tossed out the question: does gold even matter anymore? We've seen such a mania in the past decade, and then even in the past year or two, around
Even in the past
artificial
weekend.
in the past weekend about artificial intelligence, about cryptocurrencies or non-fungible tokens or all kinds of different permutations of digital assets, they're called. And countries seem to be taking sides, like splitting, parting of the waters. Those individuals and countries who are seem to be very down to earth, practical minded, interested in real things, in trying to look at where the strategic materials are in the world and making sure that they've got the right presence there or the right relationship set up or the right strategic partnership set up so that they have clear pathways to get those. And other individuals and countries that are chasing derivatives of derivatives of derivatives of things in the financial sphere or non-financial sphere that seem to be rather ephemeral in nature. And both camps seem very convinced of the importance of what they're doing, and it leaves one can be a little bit bewildering. Our viewers and subscribers tend to be rather practically minded and are trying to own real things and are a bit skeptical typically of the quote unquote system that's and the news feeds that are telling them to pay attention to some of these other things. But there's a healthy amount of discussion around that, and we wanted to tap your thought process because I think you think rather deeply about a lot of things. Not just I'm not just making a metaphor about deep things that are underground, but things that that have some substance to them. So, oh boy, there I go again. Substance. This is going to be an interesting conversation for metaphors. But anyway, we'd love to get that as our starter subject. Do gold, and I'll toss it in there. Do commodities, gold, tangible, intrinsically valuable, whatever, materials matter anymore, or are they relics of the past? Can you let us know your thoughts on that?
The short version is, of course, they are. I mean, you can't build a house out of Bitcoin. Even if you made a bunch of money on Bitcoin and can now buy a house with Bitcoin, the house is still made out of wood and brick and copper and all the other things that physically go into it. And I'll go further and say, of course, gold still matters. Gold is still money. Even the international banking system recognizes gold as a tier one asset under Basel III. So no, you're not crazy, dear audience. Yes, you're right about your core beliefs. But let me push back a little bit, not to steel man the other side, because that's not me. But let's look at if reality matters, then we need to look at what reality has been telling us over the last couple of years. So if nothing else, the reality is that if you just sat on your hoard of gold like Smog the Dragon and didn't look at anything else, you did miss a lot of opportunities, some spectacular ones. If you had bullion only, actually the better gold stocks did better than bullion last year. But let's set that aside. If you stuck with gold and gold stocks or silver and silver stocks, obviously Nvidia did better last year, and my joke about over the weekend is if you had been the first person to buy the new Trump coin, I don't know, it could have been 100x within an hour or two. I don't know how crazy that went, but I'm not recommending that anybody diversify or buy any of these other things. I'm just pointing out that this is a fact, that anybody that jumped on some of these things early could have made a lot of money. Some people did. Some people got left holding the bag. But there is an opportunity there. And I'm not just being intellectual here and trying to make a counter argument. I'm saying this is the world we're in. And I think we as realists, if we think we're realists, we need to pay attention to that. And let me give you one more takeaway from this. If you look at the lesson of 2024, as a gold butt, right, as a metals and mining kind of hard rock guy, I'm looking at 2024. And, we had at least nominally all-time high after all-time high and gold going up. And it was like 8 all-time peak, one peak going
That's
after.
just against the US dollar. It's been hitting those for
Right.
years in
All
other
around the world.
currencies. Yeah.
In the futures market, we got to 2,800. And you would think the conventional wisdom is in our little corner of the market, the conventional wisdom is, oh yeah, when the rising tide will lift all ships, come the mania phase, all these stocks will go crazy. But guess what? I mean, if $2,800 gold couldn't float all the gold stocks, you got to ask yourself, what will? Now, some people are saying, you're asking, does gold matter anymore? I think we all know, and the audience knows, yes, it does. But there's a harder question to ask is, are the gold stocks still a good speculation? And if you look at the GDX, right, the big gold ETF of gold stocks, it moved about the same as gold in 2024, give or take 1% or 2%, right? What's the point? Why would you take the risk of buying these, as Doug Casey used to call them, these crappy choo-choo train industry mining stocks, 19th century stuff? Why would you buy that if you're not getting any leverage to the metal? If you're only going to make as much money as gold itself, I take that risk. I think this is a serious question that, gold enthusiasts and silver, really any other commodity, but particularly monetary metals enthusiasts should think about. And my answer here is don't give up. Don't throw out the baby with the bathwater. The message of 2024 is not that gold stocks are dead. If you look, like we talked about the GDX, and I'm almost done here. Let you
No,
ask.
I'm enjoying this discussion.
Okay, so we look at the lesson, like the GDX, just barely kept up with gold. But in there, we had some majors that had serious trouble. Political risk, mine confiscations, 240 tons of gold confiscated. You know who I'm talking about, right? And we had others disappoint. And then we had the more quality operations, really delivering spades. And those guys, they're sitting at 52-week, if not multi-year highs. So here's the takeaway. Here's the lesson. The data, the reality, never mind our ideology. The lesson of 2024 is that we had a stock pickers market. It was not a rising tide lifts all ships, even with gold going from 2,000 to 2,800. Maybe 3,000, a nice big round number like that this year. I think that's easily doable. Maybe that will get the excitement going. But the most recent data we have from 2024 says, don't assume that. That doesn't mean give up. It does mean you need to be a stock picker. You need to focus on quality. You need to focus on the people that are actually delivering the goods. And that covers exploration and development as well as production. Where do you want to go from there, Dunnigan?
Well, let's follow up on that. When you said delivering the goods, many who have been listening to interviews of CEOs of development and mining companies for the past couple of years have heard that their financial models are typically built on a fairly conservative gold price outlook, like 15, 16, 19, something like that, maybe 2000. But so they thought, man, we must be up in nosebleed territory with in the 2,500s and up. These people must be just flush with cash. Wait till we see the quarterly results come out. Is your impression that for many of them, inflationary pressures on operating costs, et cetera, just ate their lunch and they ended up did not having the spectacular financial results that others may have been expecting when those margins exceeded their original target assumptions about gold price?
Yes. Yes, and yes. So actually, I haven't heard anybody use such a conservative price assumption as you just mentioned for a long time. I remember, well, never mind. We won't go too far down memory lane. But no, people are using, okay. So the industry convention is that the 3-year trailing average is a reasonable price assumption for monetary metals, for gold and silver. And remember, these have such concentrated value that your payback on a mine, a good mine should be 2 years, no more, 3 maybe. So using a 3-year trailing average, if your project works and works well with, with that 3-year trailing average and your payback is within 2 to 3 years, that makes sense. There's a logic for that, why we choose these numbers. Now, in a rising environment, I don't like to call it the gold price. I call it the gold dollar exchange rate because gold is money and I see it as a Forex question. But anyway, if we're in a rising environment, then a 3-year trailing average, you're averaging in lower prices. So that's very conservative. But really, since the spike in 2020, before 2024, gold was kind of sideways for those years with volatility. So if a year ago in January of 24, before the latest hockey stick, you used a 3-year trailing price, it would actually be pretty close to spot. That wouldn't really be very conservative. You hear what I'm saying?
Yes. Yeah.
You're not building in those lower prices into your average. The worst, of course, scenario is we haven't seen this for a while, but I kid you not, I remember this. When gold is declining and you use the 3-year trailing average, you get an average price that's way above current spot, and that obviously is a ludicrous thing to use. Any serious operator will discount spot. They're not going to give you a price that you can't actually get in the market today. And if you see a feasibility study that has something like that above market, not just gold in any metal, like these, lithium or nickel or some of these others that have fluctuated so much, beware of this thing. Beware of a price assumption that's not real today. And that's the bare, minimum requirement. So, right now, we're in a rising price environment again. So that 3-year average is looking conservative again. But, it's been 1 year. We just had a hockey stick. Would a correction be possible? I just mentioned that we could hit 3,000. I don't think that's that far out there. But we also saw gold wobble when Trump won.
Yes.
And, the wrong outcomes here, as long as the world thinks that, if the Fed's going to hike rates, that's going to be bad for gold. The wrong news could actually send gold down into correction mode again. So if you're looking at an assumption that looked conservative 6 months ago, it may not be 6 months from now. All of which is to say, sorry, just, this isn't it's not rocket science. It's just rock science, right? Just look at that assumption and make sure that your price assumption is reasonable. And one more quick thing, I didn't mean to go down due diligence university here, but that gold price assumption or copper or whatever it is, it's very important. The other things, the metallurgical recovery rates, these are all set by engineering studies. So unless they're lying, they're probably right. But there is another big assumption that you just arbitrarily set, and that's the discount rate. If you say, oh, well, the industry typically in mining, they'll use a 5% discount rate on that net present value calculation. And it's what everybody does, so I hold my nose. But really, mining is so risky that that's the minimum. And if you've got a project in, Ebola Central, then 8 or 10% would be a better discount rate. So watch out for that discount rate. If you've got a project that's in a risky area, there's political risk, safety risk, medical risk, currency risk, whatever, then that 5% is probably not a reasonable discount rate. So, and a lot of people don't pay attention to that. So watch for that one to sneak up on you. It'll give you a number that's better than it deserves to be.
Makes fair sense. What about that? You mentioned very briefly and very quickly at the beginning about a number of mishaps that have happened to different companies in the past year regarding jurisdictional risk. What do we know now? Are any of those clarifying that okay, that was a flash in the pan? It looks like the worry's over, or gosh, this really is turning out to be a perfect storm in this particular part of the world. I'll just throw out a couple. Rick Rule's warned us for years. For example, platinum and palladium group metals are jurisdictionally very challenged. They come from very few places in the world, and those places do have political risk, etc. So you don't have to take that one if there's a better example. But what are some key ones that raise to
actually
top
let
of
me
your
jump
mind?
in with the framework. Let's have a bit of context here. There's places like with Rick's comment, South Africa, Russia, they're enfants terribles on the world stage. They're persona non grata. On the other hand, the supply from both countries has never varied in my entire career. That story about, oh, South Africa could blow up at a moment's notice. Now, mind you, I'm not saying rush out and buy South Africa plays. I'm just saying that the supply of metals has never been disrupted, not significantly, not for any length of time. And even with, this isn't just a little border skirmish, even with a substantial hot war in Europe with Russia,
Mhm. Mhm.
and a quasi-European EU ally, the metals haven't stopped flowing from Russia. Yeah, there's sanctions and there's issues, but they just sell it to the Chinese, and then the Chinese don't buy it from somewhere else. It's all fungible. So the flow of metals has not been interrupted for the decades that I've been in the business, despite that. So I don't think that's the way, or that's not a very useful way to look at it. Way I look at it is, here's to quote Rick Rule that you brought up. Like he says, don't confuse the inevitable with the imminent. So
Mhm.
maybe it's inevitable that at some point South Africa breaks down and the mining output just drops through the floor. Doesn't mean it's imminent. And if I had made that confusion at any time in my career, I would have been wrong every year. Right?
Mhm.
So here's how I look at it. Forget about inevitable. Don't even tell me what's imminent. I want to know what's happening right now. And if right now you've got a coup d'etat that's 3 months old, or you've got a country that's gone through 3 coups d'etats in the last 5 years, that is a political risk issue that's not theoretical. It's not around the corner. That is a reality now. And by the way, even if the junta comes in and says, it's just the French, we're kicking the evil French out of our African country, that's what they say. That doesn't make it true. And you never know what they'll decide the next day or the next week or the next month. Even if they say, hey, we like mining, we get it, we are a poor country, we got to have lots of mining to pay for building new schools and roads and all this stuff. So carry on, life is normal, no concessions will be torn up and reconsidered, just carry on, we love mining. Even if they say that, A, it doesn't mean it's true. B, it doesn't mean the guy who won the coup doesn't get shot by his colonel and taken over by somebody else.
Mhm.
And see, they renegotiate these things all the time. It's like Darth Vader in the second movie when he tells Lando Calrissian, "Pray I don't alter our agreement any further." Right? They've got the guns, they've got the army, and you've got a mind that you can't just take up and move somewhere else. Right? So who's going to win that negotiation? So yeah, this is my view. Rick Rule says it doesn't matter the color of the skin of the person who steals your money. He's right. But when there's been a coup d'etat or there's active fighting in an area, there's clearly elevated risk there. And I think that's a reasonable thing to say. My other mentor, Doug Casey, likes to say that you can run, but you can't hide. And then suddenly they decide to raise the taxes in Quebec or Ontario or something.
Mhm.
That does
Mhm.
happen too. I get that. But it Ontario is not Ebola central either. Right? There is a difference in the risk level here. So the takeaway here is if there is a place that is seeing upheaval now, that is very relevant to your investment decisions, right? It's not always a coup. Like in Ecuador a couple of years ago, the entire government fled the capital because of social unrest, right? That's scary. That's the sort of thing that upsets the rule of law. And mines, by their nature, but even a factory, you could build another factory and retool if you had to. You can't take your mine with you if you flee the country. Right? You either mine it or you don't. It's a resource in the ground. So mining is very, very vulnerable to political risk. It's something that I take very seriously and I assiduously avoid. Just to be very specific, for example, I eliminated when it was clear that Scheinbaum was coming in Mexico, I eliminated all financial risk exposure to Mexico from my portfolio. And maybe that was extreme, maybe it's premature, maybe she's sounding more pro-business. We'll see what happens. But given the track record of places like that, and given her pedigree, I mean, she's an environmentalist, right? I just got out of harm's way. So that's how seriously I take this sort of thing.
There's a different type of a risk. Jeff England in the chat stream is asking about. He says, I want to invest more, but I'm concerned that royalty companies harvest profits prior to investors. I'll say that we've interviewed numerous royalty and streaming companies on our channel, and they often point out the benefits of being an investor of a royalty and streaming company because when the prices of the metals do go up, they aren't as subject to the operating cost increases, bearing the burden of inflation and such and so on. They still get their cut, that sort of thing. What about investors in the underlying operating companies being concerned about the royalty companies being higher in the food chain than they are?
Well, it's a fair point. The obvious answer is by the royalty companies. You know, though a single asset developer that goes into production, it's going to give you much more of a hockey stick type result on average than a royalty with a portfolio of different things. Though on the flip side, even a really big deal like a royalty company we all know and love that lost, what was it, 16, 17% of its revenue when Panama went bonkers.
Yep.
Right. In that case, if you're a single mine operator and that's your asset, you're toast. Whereas the royalty company can roll with it. So I'm not just saying suck it up and buy royalty companies. I mean, but there are certainly arguments for that. But there's thresholds, and the royalties go into your feasibility study. And if you have a very heavy royalty burden, that's a big problem, especially for big bulk tonnage mines. These are mines that don't have huge margins but make it up on volume, and the royalty is really difficult to get there. Back in the day, Highcroft, I remember, had like 7% royalties added up over different things, and for a big low grade mine, that didn't even get off the ground until they bought back some of those royalties. Which is a second, part two of the answer is a lot of these royalties have buyback provisions, and usually you can't buy it all back, but you can buy half of it back for X million or whatever. And if you're going into production at that point, you've raised your capex, right? You've got the money. That makes sense. So I wouldn't throw out the baby with the bathwater here. I would look at the specifics of the royalties. Anything 1 to 2% range for a good project, it's usually manageable. Above 2, 3, you're starting to get into question marks. You need to see how that impacts the IRR, the internal rate of return of these projects. Can I tell you a dad joke, since we're talking dad stuff on camera?
Sure.
Why investors in the mining space call it IRR? Because these companies, they're all pirates, and they're saying IRR.
Oh my gosh.
That was
That's
a
pretty
terrible
bad.
dad joke, but I have to inflict it on the audience every once in a while so they remember I'm a dad.
It was interesting when we visited Bermuda, my wife and I, on a cruise, which I would recommend if anybody gets an opportunity. It's really a special place. They talked about
Going through the triangle or around?
uh, straight across from New York, so I think you miss it that way.
Okay.
But anyway, they talked about the history of industries in Bermuda, and that it was first it was a bunch of shipwrecked families that were business people that had gotten shipwrecked there because there's reefs all around the island, and so their first industry was shipbuilding, but then they decided their shipbuilding got a lot more profitable if they did pirating and shipbuilding. So they would lure people in with bonfires on the beach. They were passing ships, and then they'd crash on the reefs, and they'd rescue them, and then say, "Hey, we can sell you a ship that we just built last year, that rebuilt last year, while we fix up yours for the next day." And they eventually became so profitable they became bankers. So that's now the biggest industry. Now it's tourism, but so they've gone through waves of industries. But I didn't think there's a big difference between pirates and bankers, though. So that's what it struck me.
It feels that way as an investor in junior mining stocks, but your story was more interesting and true, whereas mine was just a bad dad joke. Sorry.
Here's a question from or comment, observation, prediction from would be good to get your view on. Golden says, if the economy crashes, wouldn't silver become more or less irrelevant as it's mainly an industrial metal? I could see $10,000 gold, but $10 silver.
No. Though we did start when we talked about this earlier, silver does have its industrial side, and yes, that is important. It is a side, however. And the most recent data, we look at gold and silver and say copper by comparison. Actually, in the previous year, silver did correlate more highly with copper than gold, which is that's a mathematical fact you can look up. It's quite telling about what your viewer is asking about.
Mm-hmm.
On the other hand, more recently, silver has been correlating more strongly with gold again. And by the way, all three correlate pretty well, so this isn't a huge difference. It's just interesting when it gets closer to copper than to gold. But silver is still money. I dislike the term the poor man's gold, but there is something to that. And there is, in the same way, in China, they have this huge affinity for gold. There are other countries where people have the same thing for silver. So it's not only an industrial metal anymore. Not anymore. It is not only an industrial metal. It hasn't gone whole hog in that direction. But yes, if we see a major economic downturn, and industrial demand for solar panels and other such uses goes down, then that would subtract demand from silver that gold doesn't care about. So that is a downside.
Hmm.
My answer to that would be that there's no way that the powers that be will let that happen. If it starts to happen, the money helicopters, they're already up there. They never really stopped flying since the shutdowns, but they'll send out more. So I just don't think they'll allow that to happen. If you had, the kind of multi-year depression with soup lines around the block and all that stuff, sure, that would weigh much more heavily on silver's industrial aspect. But I don't think that'll happen. The flip side, though, the good news for silver bulls is that I see silver as a win-win metal. It is still money. It does still track gold. So if you've got scary circumstances like the viewer is asking about, then that makes the monetary safe haven demand go up. At the same time, though, the silver is a byproduct. It's not just an industrial metal. It's produced as a byproduct from industrial metals mines. The single largest source is copper mines, these great big porphyry copper mines. If you combine lead and zinc, more comes from lead and zinc mines. But anyway, from these are industrial metals, and even your pure silver mine, it's really usually a lead mine with kilos of 10% silver versus a percents of lead. So the silver is just worth so much more. We call it a silver mine. But I'm not aware of any mine that produces pure silver. It's just mostly silver. Anyway, the point though is, if you've got a circumstance like the viewer is asking about, where economically scary safe haven demand is driving up the monetary demand for silver, but the same thing is shutting down your copper mines and your lead zinc mines because we're worried about the economy, well, you'll have demand going up while supply is going down. This is what happened in 2010 after the GFC, when silver went up to almost $50. And for different reasons, it's what happened, the Hunt brothers, when they tried to corner the market. You had monetary metals demand sending gold and silver up, and you had the fear, at least, of a supply squeeze, of a cornering of the silver market. And so you had those two constraints are the two times that silver has gone to $50. So I'm not predicting this. I'm just saying, the circumstance the viewer asks about could actually be the very thing that sends silver on its next little mini mania, where it just goes on a tear way ahead of even gold.
What about that? The fact that so many countries in the world, or at least let me just say, have there are enough countries with a ravenous enough appetite for gold, for example, that how is silver in those countries being handled as well? For example, China, India, I guess maybe a lot of the Asian countries where there's a cultural affinity to metals. Is it still primarily gold, or is there a strong demand, retail and otherwise investment demand? Is there any
I'm sure Andy
government
Shetland
demand?
could answer this better than me, and others who have more detailed tendrils in those markets than I do. But from my travels in these countries, my perception is that the Chinese affinity for gold, and really much gold, if not uniquely or only, but mostly gold, it's
Hmm.
somewhat unique. But you go through China and everything is decorated in red and gold. You
Hmm.
don't see silver, right? That's not, if it's auspicious, if you want to show wealth and high class, it's red and gold everywhere. In other countries, silver is still, it is still seen as money. The plata, silver in Spanish, that is the slang for money. If in any Spanish speaking country, if you say, oh, I'm broke, you say, no tengo plata, I'm out of silver. So it's still there. And in India, it is still very visible in the Indian market. You'll see when gold gets way ahead of itself, you'll see more buying switch to silver. For the average Indian person, maybe not the banker, maybe not the CEO, but the average person out there who wants to save a little bit and in real, wealth, you'll see that there is substitution between silver and gold as their prices fluctuate on the markets. So, and that's with China's birth rate rolling over, that's arguably the most important demographic trend in the world, for those people to still see silver as money. Clearly Latin America, my example with plata, but by the way, in French, the word for money is argent, silver.
Hmm.
So this is not unique. And I myself have actually argued for, if or when gold goes back into circulation and money, I've raised the question that it doesn't necessarily mean that silver will go back into circulation as money, because you don't need it anymore to make change the way we did before. I don't, if or when gold goes back into circulation as money in the 21st century, I don't think we're going to go around with medieval coin purses full, clinking at our
Mhm.
belts.
Mhm.
We will own it and we will transfer it electronically, whether blockchain or otherwise. If you're doing that, you don't need silver to make change. And you certainly don't need copper pennies to make change for the silver, right? So even though I have said that, and hence my Darth Silver nickname, it's still, that doesn't actually exist yet. I'm saying I can see that happening in the future. Like right now, if the internet goes down, if there's an EMP, right, if World War III happens and you need to transact real value,
Mhm.
it's gold and silver. Your Bitcoin ain't going to help you in that kind of environment, and heaven forbid we go down that path. But
Mhm.
I'm just saying that right now, the monetary metals are still what they are and have been for millennia.
It's interesting because just this week we interviewed the CEO of Glint Pay, and it'll be published later this weekend. And they have both gold. They are adding silver, have added silver in Europe and will in the US, so that you can instantaneously transact in any quantity and use gold or silver or any of a number of currencies, and all of this privately on a card that looks just like a MasterCard to anybody that you're using at any vendor that you're using it at. But meanwhile, your nest egg is stored in real metals and not in fiat currency that's being destroyed by inflation. Um, what about the rest of the world that's turning towards, it seems, locking down strategic commodities? And I know you focus not just on the metals, but on other materials as well. Are there other strategic materials you see that it seems that the East or the BRICS uh, bloc have more of a practical assessment of or pipeline to or whatever than the Western world does, and that there may be some rude awakenings, just as there were when we had the COVID shutdowns of the global supply chains, and suddenly outsourcing
Right.
everything or
Yeah, yeah,
offshoring
yeah.
everything wasn't cool anymore.
Yeah, this is a real, risk, hot potato going forward, looking ahead, because there's no doubt. I mean, China basically is out to conquer the world economically rather than with bayonets. It's a much more efficient way to go about it. But you see them, spending billions of dollars to build roads in African countries. And what do they get for that? Suddenly mineral licenses and concessions come flowing very easily towards Beijing instead of towards Western tenders. In some countries, you can even have previous concessions taken back after the coup, and then suddenly they go to China. Well, why is that? Well, China basically is buying its way in. Um, I'm I'm not saying this approvingly. I'm only saying it's better than sending armies. I'm not saying I think this is necessarily a wonderful thing, but as a realist, looking at the world and the cards that were dealt, it doesn't do us any good to wish we had four aces. We got to look at the cards we have and what the other players are doing. So you're absolutely right about this. My hope, well, I am more hopeful now than I have been for a while, and it's not just because of the U.S. election, and I'm not just trying to paint Trump as a hero here. I have huge disagreements with Trump. I don't have a MAGA hat. Sorry, guys. Um, but he does have a pro-business agenda, and he does seem to be, even if it's just for political reasons. Let's say he was secretly woke, but he knew his voters were anti-woke, so he's going to be anti-woke. Now, I don't think that. I'm not. But hear what I'm saying. I'm saying that his agenda, I think, is more reality oriented, and I think that is a very good thing. But all of which was actually to say, I don't think Trump is the most important thing. I think for the global stage, the fact that the BRICS tend to be so pragmatic,
Mhm.
that's huge. And you can say, oh, well, that's the BRICS and they're getting ahead and the West is falling behind. Yeah, well, how far behind is the West going to fall before they decide to, hey, we need to change something? And another thing to be hopeful in, despite the war in Ukraine, is, and I have traveled extensively in Eastern Europe, and I've met a lot of people there. I have a lot of former students there, and these are very pragmatically minded people. They're not necessarily libertarians or anarcho-capitalists or people like Doug Casey or me or whatever. They're very pragmatic. They want to get ahead and they want to know what works. And they don't want to hear about socialism, libertarianism, capitalism. They don't want any ism. They just want to know, what is good business? How do I raise money? What's a good business plan? How do I get ahead? What are the practical steps? I think this is enormously helpful. And it may well be that, Poland, maybe even Ukraine after the war, but for now, places like Poland and other centers of really entrepreneurial, practical, go-getter kind of energy in Eastern Europe could help drag the EU back towards reality. There is a backlash in the US now, I think, back towards reality. And arguably, this is around the world. We're seeing, I don't want to declare premature victory here, but we're seeing backlash against some, let's be charitable and let's just say some naively optimistic and unrealistic social and economic agendas that we've been having to struggle with. So I'm not saying it's all over and it's all, a bed of roses now, Donegan, but I am saying that, it just seems so hopeless for so long. The world is just going the wrong direction. And now there's pushback, not one place, just around the world. And I think I do find some hope in that.
Do you see the affinity towards silver from India being a new kid on the block as far as emerging? We saw central bank buying from ostensibly from Russia and China and India and some other countries in 2024. Do you foresee that persisting in 2025? Increasing, decreasing, other countries getting on that bandwagon once they realize, oh my gosh, there's this. It
Yeah,
reminds me
I
of.
understand the
Go
question.
ahead.
I
Yeah.
would defer to people like Andy Schechtman or people more plugged into those specific industries. I'm not a bullion dealer. I can't tell you what the flow of business is like. I'm a due diligence guy. I get paid to kick rocks.
Fair enough. And you also you travel extensively as part of that. One of the things I found while I was digging around here while you were talking, you were mentioning about the currencies of the world in which gold was at an all-time high. Here's a 1 million de bolivars note from Venezuela. So if you want to find a currency in which gold has been at a high for a long time, and maybe
I'm
you
sorry.
could,
Let me jump in on that. I'm
yeah,
headed
go
to
ahead.
Argentina in a couple of days because that's one of these places that's taken a turn in what looks to me to be if not the right, then at least a much better direction.
There you go with Milei.
And
Yeah.
and I was just arranging a pickup from the airport to go to the hotel, and they said, oh, it's like 20 million pesos, or I don't remember what it was, or 20,000 pesos. It was some huge number. And I said, oh, okay, well, what's that in dollars? Oh, it's about $20. Okay, no worries. Send the limo.
I am a millionaire after all.
Yeah,
Yeah.
I'm a millionaire
Um,
after all.
we have a question in this. You may decline on this one as well. Fazdal asks, several of the Liberty and Finance guests, technical analysis commentators, have predicted a stock market crash within weeks, meaning that the stock markets have seemed particularly toppy or volatile and that sort of thing. Others see no, we haven't even reached the bubble stage yet. We're just in the boom stage, and now we're about to transition in the bubble stage because the bubble mania is where everybody's an expert and everybody thinks that that's gonna go on forever, and they're all making $1 million. Uh, any gut feelings from you as a
Yeah,
rock kicker?
I don't want to get all your guests angry at you, but I got to say, I think the only year that I don't, in my career, the only year I don't remember predictions of stock market crash around the corner was probably 2009 because it was still on the floor.
I think Rick's quip on that is something that between him and Doug Casey, they've predicted accurately 17 of the last four recessions or that sort of
Yeah.
thing. Yeah.
Yes, exactly. But okay, but I'm not trying to be facetious here. I mean, it's important that every year somebody's convinced there's going to be a market crash, and from no, I'm not going to name names. And they've only been right arguably in 2008 and 2020. And they've been wrong every other year that I've been in this business. So, that's just a fact. Take that sort of thing with a grain of salt. The other thing is, don't forget fiscal dominance. We talked about that before. Bad news is good news. The Fed has trained investors to treat bad news as good news. So you could have some legitimately bad news, the kind of
Hmm.
thing that should make investors flee Wall Street. And
Hmm.
instead, they could just pile in because they're, oh, that's it. Powell's going to come riding into the rescue now. He's got to, no choice, right? In fact, that's what happened in 2020, not just Powell, but the powers that be around the world. That should have, other things being equal, absent any government intervention, that would have been a market crash,
Hmm.
a
Hmm.
la 1929 or something, for the record books. But the intervention was beyond the imagination of going beyond the record. It's like they had to break the charts and then break the room the charts were in to look at all the money printing and the amount of money, just checks just sent straight to the people's mailboxes and stuff. Just crazy stuff. So you got to ask yourself, is the administration here or whoever wins the election in France or in Germany or in Korea, South Korea, is any of these new politicians going to want to have the ship go down on their watch? No, they're going to pull out the stops, no matter how many money helicopters it takes if things start looking bad. So please hear me, dear audience. I'm not saying it's safe and there's no chance there's going to be a market crash. Mm-hmm. I'm just saying every year it gets predicted and most years it doesn't happen, and that we can see pathways, ways and means, if you will, money helicopters and whatnot, that could prevent this from happening. Like it deserves to fall. As Nietzsche might say, the object that's on, it deserves to be pushed, but that doesn't mean it will. And if you bet the farm that it's going to, you could end up losing the family farm when you need it most.
We've interviewed John Williams from shadowstats.com on our channel several times talking about the distorted, you said that sometimes governments lie about things. Well, he claims that they lie a lot about what's the truth is about our currency and its value by changing the ways that they measure that just to cook the books. But he does talk about the accumulated destruction of the value of our currency happening a lot faster than what the Fed admits. They say they have a target of 2%. Which is another arguable, like why would they want to be destroying the value of our currency by 2%
at all,
every year?
let alone
At all. But anyway, then they say, well, actually we can't achieve that. We're more like 3.6% or something. He says, no, they're between 8 to 12% or whatever. Thomas Toops says, by historical measures, isn't silver still very cheap? So if you look, you talked about the 2011 high of 50, but that was also reached back in 1980. Yes. And that was a lot of years of accumulated inflation ago.
Yeah, that's true. It's historically cheaper than gold is in the current context. And I haven't done the math recently, but the last time I used CPI, yes, I know the CPI is nonsense, but if you use the CPI to adjust for inflation, then the other side can't say, oh, you're making up some tinfoil hat number. Like you use their number and they can't criticize it. And so it establishes a sort of floor, right? So if that's the most optimistic case from, adjusting by CPI, a real all-time high, real is maybe the wrong word here, I'm stumbling over it, but a CPI adjusted all-time high in silver would be over $200 an ounce. Whereas it's only 3,500 for gold. So gold is much closer to an inflation adjusted high than silver is on that basis. Yes, silver is cheap. If you look at silver's average price over the last 70 years, even adjusted for inflation, it's not scraping the bottom. So I can't call it an absolute bargain. I can just say that, yeah, I see more upside in silver if we're going to hit new real highs. But that is an if. We do have this increased industrial side to silver. So it's not a guaranteed thing that silver will more than catch up with gold, as it always has in the last. Everybody likes to say that silver lags at first and then it more than catches up. Well, that was true until 2020. Like every gold silver bull market until then, silver lagged at first and then it more than caught up on a percentage gain basis. That didn't happen in that big breakout for gold in 2020, and silver never really caught up. Or let's put it this way, gold hit new nominal all-time highs in 2020. We're still waiting to beat the 1980 or the 2010 highs in silver nominally. So you might say, okay, well, Lobo, gee, that's just one time out of 10. So 90% odds are pretty good that silver will more than catch. I agree. And I do, for the record, think that before all is said and done for this monetary metals bull, I do expect silver to outperform gold at some point. I'm just saying it's significant that we can't say it always happens anymore. There's now an exception. And what's concerning is that the exception is the most recent case. Like if it was one time, in the late 90s or something in the middle of this thing, that'd be one thing. But the fact that it's the most recent case that it didn't happen, if that means the market has changed in some way, then that's a little bit scary. And so even though, hear what I just said, I think I can make more money on silver than gold by the end of this bull market, but I think the risk is higher. So there's a risk reward balance here. And I got to tell you, I see more alpha in silver, but I feel more safe in gold right now.
It's been said, I've heard it said that gold is the premier asset for wealth preservation, that no other asset can match its flexibility, portability, fungibility, and all those things and it certainly is the darling of central banks around the world as
Well, not
opposed
just
to
central
so.
banks, but deep pockets. I have a friend who's a wealth manager for in Switzerland for old European money. But you know what I mean? Like this isn't just
Mhm.
deep pockets. This is like serious conservative money. You don't lose this money, right? And he's had an issue where the generations change and the younger scions of the family come into the office and say, okay, so how's our portfolio? How are we doing? Gold, what do we have that for? And he tells them gold won't make you rich, but it will keep you from becoming poor.
Yep. Andy Schectman likes to say it's not to get wealthy, it's wealth itself. So if
Yes.
you
Yeah.
stockpile that, and frankly, I had a very, very close friend at a previous employer whose uh, grandfather passed away, leaving the grandmother uh, with a small safe in the living room with gold in it. And with that, she got two generations. That she got all the grandkids through university and often professional careers, and the family stayed intact. The family survived what would have could have been a horrible financial calamity generationally, but they made it through because of the decisions of one man to
That's
have
awesome.
accumulated
I
that.
can I can I can add to that. Your audience may have heard this before, but I have experienced in my personal lifetime, a financial catastrophe where it was literally my childhood coin collection with my Morgan dollars, my silver, that fed my family when nothing else would. So I have experienced not just real money as savings, but the fun part of that story is that these were silver pesos, and the number of zeros that had been chopped off the pesos since the 1950s when these coins were minted that I collected was enormous. So it was a lesson in real money, but it was also a lesson in money versus paper and inflation and all that. So I'll never forget those things. I don't care what cryptos do or whatever. I'm always going to have an allocation to real money. I just wouldn't feel safe without it.
We've been delighted to have this chat so far. If people want to not just have this chat, but they want to follow your thinking and your writing on a more current basis, how should they get connected in and what options are available for them?
Well, of course, I have a business and I do hope people like my thinking and want to hire me to be their due diligence guy through our paid publications. But the simple place to start is the free weekly letter. It's called the Speculator's Digest. You may or may not agree with all the things I say. Call me Darth Silver, whatever. But I can promise that if you sign up, you'll see what my takes on the markets and the metals and commodities, oil and everything, and you will not get a flood of spam. I hate that. You get one email per week
Hmm.
and you decide if you like the way I think based on that.
We have a similar concept with not spamming people. So, folks, if you don't want to miss a single episode here with Lobo or any of our other guests, make sure you're on our free mailing list. That's at libertyandfinance.com. Just put in your email address, click submit. We don't share your email address with anyone, and we'll only send you one email per day with our latest interview and any weekly specials so you're aware of all that. And if Rick puts on a conference, which he does fairly often, you'll find that in there as well. But it's one per day, and it's free, libertyandfinance.com. And Lobo, we're so grateful for your presence here and always look forward to chats together. Uh, I don't mean to keep making these what sound like tongue-in-cheek metaphors, but you're a down-to-earth guy, and I appreciate that. And I believe you always call him like you see him, and you speak from real life experience, and we appreciate that here. And
Well, I
and so,
try, and I appreciate you, Elijah's father, taking the time to jump into the breach here and have these conversations with me. Both of you guys, I always feel like I'm talking to a human being, and I enjoy it too.
hey, and that means everybody out here, thank you also for being here because it's you who make this possible. Everyone who's watching this, participating in the channel, sharing these with friends, neighbors, co-workers, family members. So please do share this widely, and we got to spread the information because this is stuff that people are not going to be hearing about typically on the financial news if they do watch that at all, or even on the mainstream channels until it becomes a crowd mob momentum thing. And by that time, so
By
many
which
of
time
the
it's too late.
opportunities.
But
Yeah,
never mind that. Sorry, let me add agree. We were wrapping up here, but this is actually really important. Like the story I just told about how the silver, I fed my family with that, Dunnigan. Right? This isn't just about, jumping on the next big thing to make money.
mhm.
The message and what we're talking about here is really important for people's safety and security and well-being. I do hope the audience takes that to heart.
As do I, and that's ironically how we got into this in the first place. My channel used to be called Reluctant Preppers. It was about how heads of households could do a better job of making sure that their family was reasonably and prudently prepared to handle whatever life may bring our way. There's so many unpredictable things in life, whether it's natural disasters or politically created disasters or whatever, that it's good to have thought through things and to have some reasonable preparations made. And that we ended up the viewers spoke with their interest. They were like about 10 to 1 more interested in financial preparedness than in many of the other aspects that we were talking about. So we gravitated in that direction. So everyone out there who's listening, it was your interest and your concerns for the good of your families, for the good of all of our families, that led us in the direction that this channel has taken. And it's very gratifying to me to hear every week I get calls from potential clients or from viewers who say, and it always starts, "You don't know me, but I know you," is how the conversation starts. And it's very gratifying to know that people have been here over a decade, and they appreciate the uh, way that we just try to really have real discussions about things that we believe matter to people. And I'm frankly very concerned, given the nature of what we started talking about today is sort of this artificiality of a lot of our modern world, and that a lot of people could get hurt very badly if things don't stay balanced in this house of cards that
Yeah.
people are at least trying to tread water. And even in this environment, people's earnings and savings and retirements are being stolen from them through intentional inflation and taxation, all that. So there's a lot of harm that's being done to people. So we're trying to wake people up to the harm that is being done so they can protect themselves from that, but also protect themselves from the potential harm that could come over a weekend some night, and that could happen on the individual basis, or it could happen across. A huge insurance company goes belly up, and all of a sudden, a lot of people aren't protected, et cetera, et cetera. So
Bank
we
holiday. Yeah,
hope,
we know how that goes. Thank you, brother.
yeah, yeah. Thank you, Lobo, for being here. Thank you, everyone, for being in the chat, and once again, thanks for joining us on Liberty and Finance. Great.